While some economists don't see the current levels of tariffs and retaliation hitting growth substantially, the bigger concern for now is the unintended consequences. Steve Liesman has more on what those are and what it could mean for markets and the economy. Hi, Steve.
Hey, Michelle. Yeah, there is fear the trade war could escalate and become meaningful in terms of world and global trade, but it's not that right now. The biggest concern is the effect on sentiment and investment, especially that it could undo the positive effects of the corporate tax cuts. Moody's Investor Services writing, quote, the second order impact of tariff increases would be to dampen currently robust global growth momentum. Fed officials, including Chairman Jerome Powell, say their contacts in industry are telling them it's causing some to question CapEx already.
Concerns about changes in trade policy are rising, I think it's fair to say, and also that you're beginning to hear reports of companies holding off on making investments and hiring people.
And in an interview this morning on Squawk Box, President Trump's top economic advisor, Kevin Hassett, agreed that tariffs have boosted uncertainty.
We are in a period of uncertainty, and that period of uncertainty is visible in some places. You can see it in lumber prices and steel prices and so on. But again, the president's long-run objective is one that I think all economists would share, which is to get, think about all of the barriers in China. Think about the fact that China is stealing more than $100 billion a year worth of our intellectual property.
Daniel Eikenson from the Cato Institute, in a back-of-the-envelope calculation, says if the president follows through on recent threats and imposes more tariffs on autos and auto parts, which would raise the total under tariffs to $800 billion, the extra profits from the corporate tax cuts, quote, could be entirely wiped out for the manufacturing sector, end quote. Carl?
Hey, Steve, it's Michelle here.
Hi.
You know, Scott Wren raised an interesting point, and I've heard it now from a couple of advisors out there, which is we are all rightfully concerned about what happens if there's a trade war and what is the market pricing in. But a lot of them argue, to Kevin Hassett's point, what if ultimately we have lower tariffs around the world because we're finally getting reciprocity out of China? They don't think that's actually priced into the market in terms of a probability. Well, and that would be enormously positive.
It would be. I just don't know where the market is right now, Michelle, on this issue of it's all a negotiating tactic. I think more and more now the market looks at what the president has been doing and saying and sees these tariffs. They're going to be implemented. They're going to exist. And watching the pushback from our trading partners and saying, you know what, it's not helping out at all. He's lost the ability to get the low-hanging fruit of some of the changes that might be made. Canada is reluctant. Europe is reluctant. China is reluctant. All we're getting are the retaliatory parts of it, not the negotiated and the progress. It was an interesting comment by Goldman Sachs, which basically said that it now sees the imposition of tariffs on China as the base case. Before, they wouldn't do that. Before, they'd say, you know what? We think this might be negotiated away. Now, implementation is a base case.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.